presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show, and boy, oh boy, we're off today. Man, that's a nice bar down. Looks like it might be trying to head to those lows of about 550 in the SPY. And hey, it kind of makes sense because I'm not sure things are necessarily improving. So we'll talk about all that. The first thing I do want to talk about, of course, is we did have Larry live trading today. That was a fantastic time. Man, some pretty good picks, that's for sure. Essentially, if you're not familiar, what that is there is a room in our trading channel, in our trading room, excuse me. There's a private little room within it. It's like a nesting doll of rooms almost. And at the core of that nesting doll is Live Trading Fridays with Larry. And essentially, you sit there, he is trading, he's sharing his charts, he's talking with everyone, he can ask questions, he responds, and really, a day like today was fantastic for that. And honestly, I'm gonna argue that we're gonna have a lot of those this year. One of the things that I find difficult in my trading journey is trading, some kind of chop. Now, luckily today, it was a nice movement to the downside, but Larry does a great job managing that, and I learn a lot each time I watch him. And so if you are interested, you can go to TFNN.com. Right on that front page is Live Trading Fridays with Larry Pesavento. Let's take a look. What do we have next week? We have the 11th and the 25th are those trading days. That's from 9 a.m. to noon Eastern time. Go ahead and check it out because it is worth it. All right, let's take a look. We got the SPY trading off about 1.85%. We were down as low as about 2% right now, hitting that low of 555.22. Man, you started up at 566 in the morning, and just a steady sell off. Those PCE numbers were very tough. Take a look at the composite, off about 2.53% at 17,352. And you get the Dow Jones Industrial trading off about 1.58% at 41,631. In the Russell, also taking it pretty low there, off about 2.04% at 2,038. Now, the gold contract is doing phenomenally well today, up 0.72%, making new all-time highs again. Unfortunately, some of the mining equities were getting hit today, which is just kind of a shame, but that's all right. It happens when people are just afraid of being in equities, right? So, I mean, this gold is being purchased, and, we're talking in the den, there's no end of the month buying. And it's like, listen, we still got, 50 minutes left. So they can always just rally this thing into the end. But what I would argue, that's probably not going to be the case. And why are you seeing gold move up when everything else is? Because people don't want to be in equities. The PCE being, elevated is pretty intense. We'll pull out these numbers here in a second. Looking at a change from a month ago, at least on the BEA, you had a 2.5% increase. You have a downward revision this quarter in GDP growth to, I think, about 1.2%. This gets into sketchy stagflationary environments. That's not stagflation, of course. It's still growth, but it's contracting growth, right? And of course, there is still value in equities, and there is a chance that you're getting some kind of oversell, right? But I don't know if that persists, right? You still have a ton of uncertainty in the market with these tariffs. Of course, you had CoreWeave blow up today, which was not good for the data center equities whatsoever. There is an equity we'll take a look at that I do think is oversold on this news and has decent prospects. It is a growth company. and its last year revenues increased substantially, and they're trading, the revenues are just about under current market cap, which is interesting for sure. They're partnered with Dell. So you have the gold contract trading up 0.73%, and this is just a way to hedge that unpredictability. You know, and then it's like April 2nd, we're supposed to get these tariffs in here. I'm not sure that President Trump anticipated so many countries kind of combating this, right? I mean, you have the new Prime Minister of Canada came up and said today that essentially our relationship with America is just, or at least the one they had prior to all this, is essentially over, right? You have far less travel from Canada into the U.S., off about 70% based on some reports. And so this is a tough area. And so what I will say that is kind of a silver lining here is you are seeing the 10-year rate come down just a little bit. We'll take a look at that just real quick. I believe it's at 4.23%. Give me a second. So yeah, the yield's trading 4.26% right now. So that is nice. And I think what that's indicating is this is starting to show relatively some weak conditions, right? You are getting consumer spending coming down, which I think is exactly why you're seeing Amazon sell off to the way that it kind of is. You have ride sharing going down, which is why you're seeing Uber kind of go down a little bit there. Of course, you have Coca-Cola to the downside. Oh, this is the wrong, okay. Yeah, sorry, that's on my private one. We'll take a look at Coca-Cola. That's off 0.59% today. Basically on the news that RFK might prevent people from buying soda who use food stamps. So, you know, there's a lot of things to be a little bit spooked about. And I mean, you're looking at Hood as well, which I am smitten with Hood's banking idea, Robinhood, right? 4% APY on the savings. Of course, the way that they see it is they're trying to get people essentially to be more loyal on their app, right? And you can integrate their finances. They're doing trusts, which is pretty intense. You have tax professionals that will work with Robinhood, and you can ask them questions. And of course, what a lot of people are locking onto, which makes sense because it's one of the more bizarre things that I've heard recently, is that they're going to start door dashing. I say door dash just as in like the action. They're going to start door dashing cash. And again, I want to say it's not clear whether or not DoorDash will be involved in that. They're going to start delivering cash to people as opposed to going out to ATMs. So from an individual who is interested just in general security, whether that's cybersecurity or physical or whatever it might be, that is super interesting. And we'll wait to see what happens. I'm not sure how many people will necessarily use that, but the banking is extraordinarily interesting. But you get Robinhood going down. Listen, if people are spending less money going out and eating and on ride sharing, etc., why are they going to be buying equities? And I'm not saying that's necessarily the right way to look at it, but I believe that's probably the sentiment that's going on here. So folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Okay, welcome back, everybody. Take a look right now. SPY nearly off about 2% there. Let's get off that daily, just see what the relative volume is. So, I mean, you know, you're building some okay volume, I suppose. You have the composite off about 2.72%, Dow Jones Industrial off about 1.69%. Those rates continue to fall in the 10-year. Let's see what else, man. Disney getting sold off, Google getting sold off, JPM. You know, I don't know if this data center blow up is a little bit potentially overblown. Now, for things like Nebius, now, listen, like CoreWeave's having issues with their debt and stuff like that, where things like Nebius don't. Your Nebius is, but the problem is this is going to be a victim of the circumstances, right? So I did get out a lot of my Nebius position at essentially just at break even because I don't know what the future is going to really hold in the near term. And if I see any sign of strength for it, of course I will absolutely get back in. But I mean, it looks like it's going to 20 to me, you know? I mean, it's already touching basically that breakout level. This is just very weak. It's just very weak. You know, you had some nice resistance kind of around that like 25 level, and it really did break it with volume. You know, again, I think it's a good company. It is burning cash, but they have cash to burn, and they can, you know, dilute, or they can, you know, get leverage or whatever it might be, and they'll be okay. But I think there's just a general question on the, you know, I guess validity of the play that was made on data centers. So we're going to see what happens. And again, I keep seeing that same news rehash from TD Cowen with Microsoft, like they're canceling the data centers. This was just, in my opinion, that was totally overblown in and of itself, right? But I do think the economic data is not fantastic, and there's still a lot of uncertainty that's going on here. And again, I mean, you know, let's look at Tesla to see what's going on. I mean, you're off 4% today in Tesla. You're starting to build some decent volume right now. I think that was probably the, honestly, right? I think that's your near-term top here, to be quite frank, around 291.61. There was a lot of volume on that. A lot of that is retail. And again, I'm going kind of off this concept that if retail is dumping billions of dollars into equities, it means we're not at the bottom yet, right? So, you know, we'll see what happens. And again, with the full self-driving, but hey, we just saw that people are spending less money on ride sharing. And I also don't think it's going to be as clean for Tesla as people think. Additionally, you had HSBC. I mean, man, it's almost like my price target for Tesla is a bit more forgiving than what a lot of people are. I think JP Morgan's at like 150. You have HSBC, who are definitely shooting for that gap up of April at about 130. So again, the only thing that's great for Tesla is their cash to debt ratio right now. So, we'll see what happens. Of course, there's a lot of ops running on both sides. I think a lot of people are speaking on it, especially the equity analysis side from a position of politics, which I can assure you is not what I'm doing. That's kind of where I think you're at. So when I'm saying these things about Tesla, it's not because of my personal beliefs getting in there either way, right? Whatever those are. I think there is some significant problems that Tesla's going to face here. So, I can sit here and say, okay, you're off 3.7%. Yeah, but this stock has been moving, that's almost low percent over the day than what it has been moving at, right? So it's almost kind of like a normal move with it. But I think everything's starting to show kind of some cracks here, And you're also seeing, one of the things that can float them is going to be they have that refurbished Model Y, okay? So that might be okay with them. Can they, pick it up from the loss that they had through January and February? We'll see. I do still think they're going to have significant issues selling in other markets. China might be a little different because they're trying to spend right now. So we'll see what happens. And of course, it was one of the most purchased cars in Norway during the last week's report, which can usually be a good indicator. So we'll see what happens. But you're also seeing via the PCE data, you had an increase in the cost of vehicles, if I can find it, motor vehicles and parts of about 0.4, so about 0.1% increase month over month. And I wonder if some of that is due to people buying before the tariffs come in. I don't know. Do people have enough money to make that kind of decision? I'm not sure. So, but that's kind of the way that I'm interpreting this a little bit, and I think other people are interpreting it that way as well. So, you have sticky inflation. It's kind of hard to say. Listen, it's almost like the volatile category for the PCE price index was the thing that kind of tempered the PCE price index increase, right? We had about 2.5%, and then that was up 2.8% from last year, right? So that's the core personal consumption expenditures price index. Okay, so inflation is still extraordinarily strong, and the way that I'm trying to think about all of this is I don't see, can they cut rates in May with this strong of inflation? I don't know if that makes sense. And so you start running into an issue where you're having this contracting, economic growth, right? So a downward revision in GDP to, I think, about 1.2% at least this quarter, and a 1.7% for, fiscal year 2025, or fiscal year, just year 2025. So, usually what you would do is try to decrease the Fed fund rate and then hopefully the 10-year, and you get money flowing again. But, if inflation keeps going this way, can they decrease those interest rates? And I'm not sure. I think people are now starting to consider that we might, get into stagflation or recession to some extent. Now, you did, to be clear, it's a lot of my thoughts, of course, or it's all my thoughts, but you did have one of the Fed chairs say that he doesn't see stagflation being that being a substantial risk, right? The occurrence of it. So that is something to keep in mind, of course. But we'll see what happens. Adding in the tariffs, I think, is going to just cause more uncertainty. And at least in that near term, it will absolutely increase prices. Now, could that stop spending in such a way that your inflation just drops, right? Perchance, but then maybe that cuts into earnings. It's a tough situation, and to be honest, I don't know if anyone knows exactly how that's going to go out. But my point in saying this is that, yes, you're having a major sell-off right now in a lot of things. Roku's off 4%, Poor Air had pretty bad earnings, Fubo off 3.81%, Palantir down 5.5%. Again, SPY not doing well, Composite off. Let's take a look at NVIDIA, because that's getting sold too. You're off 1.18% at 110. Again, it's like you're inching back down to those lows. And I don't know if this is necessarily a retest. I do think this is, this movement is kind of based off of this economic data and then everything that went on with CoreWeave. No equities necessarily look appealing to me. Amazon is quite the sell-off, right? But if you're seeing a contraction and if people are foreseeing contracted, consumer expenditure, then it would kind of make sense, Now, I can't say if that's the exact number that you want it to be at. And I still think on the long term, Amazon is a fantastic pick. I think Quantum is there if you're into that kind of thing, data centers there, cloud providers there, and Amazon's just it's a behemoth, and it's one of the ones that I feel like is not so hype-based, which is appealing to me because I think the hypers are getting punished right now and will continue to. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey, welcome back, everybody. Yeah, continuing to kind of stay suppressed here. throughout the day. Let's see what else we got going on. Lucid getting smacked. And again, be careful with these alternative EVs, guys. I still think the environment is somewhat hostile to EVs. It doesn't have that support that you saw from the Inflation Reduction Act. And it's a good like thought, right? Like, oh man, like the sentiment on Tesla is down, who's gonna buy? Let's go into Lucid or Rivian, but still, the macro conditions are a little bit tough. Man, there's a lot. Okay, let's like, there's so much to talk about. You have TSS, you have GME, which is, I mean, just blowing my mind that this was green today, right? I mean, this thing should have gone down even further. This should not be at these levels. It is unbelievable. I guess you're talking about a market cap of 9.7 billion, like, okay, like you have a cash of 4.5 billion, which is appealing. But again, the question is, what on earth do you do with that cash? Because you don't have a competitive angle whatsoever. That's what I was saying yesterday. The best thing they could probably do is just liquidate everything and just give assets and money away. Or just give assets away, because I don't think they, get out of this. I mean, what literally can GameStop do? And then what I've been seeing a lot of, I mean, even like today was, why are we doing this? Come on, today, Jacob. I mean, you had some movement to the upside, right? And you're still higher than that major sell-off from this morning, right? You opened at, what, 22.76, so yeah, you are down a little bit, but it is impressive to me that this is still going on here. And really, for everyone listening out there, and again, I know we have a lot of younger guys, and I get what it's like to be a younger guy in this market, man. You see that kind of stuff, you're like, let me hop in. But that is emotional, and we have to kind of look at what's going on, right? Because oftentimes, what this is trying to like prey on people, right? I mean, these massive run-ups are like, let's do it again. Remember the glory of the short squeeze. And I think it actually did have some pretty significant short interest out that could give you the potential for a short squeeze, but the honest thing about this is that they're not doing well, and this is an unbelievable PE, and honestly, I mean, that like 2024's earnings were just like, the net income was just not, it made no sense. So yeah, I mean, if this world were real, give me a second. Or rather, the world of GameStop, rather. I mean, this thing really should be back down at, I mean, probably even less than that. I don't know, because I don't see the forward growth opportunity. And so then all the people who are arguing, well, hey, it's the Bitcoin, and there is a strong contingent of them speaking right now. Again, like, you're taking out debt to buy Bitcoin, and you're getting the money for that by convertible. Like, I mean, it's just not a good thing. And I really, at some point, we can kind of look at the convertibles, like the structure, and that would just be more for like didactic purposes than anything. But just know that, well, here's the thing. If you want to buy a company that owns Bitcoin, like, okay, you can buy anything else. Anything else. I mean, even Tesla at least owns Bitcoin, right? Which I think, again, is going to be a significant problem for them coming up on earnings, because they just mark-to-marketed it. And we spoke about this on January 29th. I think they voluntarily decided to mark-to-market it. They didn't have to at that point, but they voluntarily, and it was good because it actually did help them. But now we'll see a decrease in that, and that could give, and again, I don't know how many people are actually looking into balance sheets like this, right? But that could be bad for them, right? That's a suppressing factor for Tesla. So very tough. And again, I think it's a publicity stunt. I don't know what GameStop gets from that whatsoever. Not really good operations. I think it will bolster, I guess, earnings in a way, because if Bitcoin does positively, then they can say, hey, look how well we did, even though it's not really realized at that moment. But long story short, it's just not a good company. And this is obviously a big hype thing. And I'm really surprised it even got to these kind of levels. I mean, right, this is just people trapped like here, which is unfortunate, because nothing, again, has improved for these guys whatsoever. So anyways, that's GameStop. Very interesting kind of stuff. CoreWeave Wow. Not great for CoreWeave. I don't think that's trading yet. Revenue generated by business with 2 customers, Microsoft being the largest one there, slipped 2.5% in its market debut after the cloud computing provider raised $1.5 billion in a downsized initial public offering. Ooh. Oh, man. Yeah, I think that's almost like, that's less than half of what they were talking about, I'm pretty sure, right? Yeah, okay. Yeah, the company's stock, yeah, $39, below $40. What are you trading at? $40.01. Cloud computing providers sold 37.5 million shares at 40 apiece, down from an initial plan of 49 million shares at 47 to 55 apiece. That might have raised as much as 2.7 billion. Okay, yeah, so they had less shares selling, which is fine. That kind of makes sense there. Anchored the share sale with an order of about 250 million. NVIDIA did that. And they're an existing investor of CoreWeave. And the way that NVIDIA's been doing stuff is they are, oh gosh, what the heck is the term? They lend, vendor lending, I can't, oh my God, I'm blanking right now. TGIF, I guess, right? Anyways, they're, giving a lot of this stuff to CoreWeave on loan, and then they record it as revenue. It's a whole thing, right? So it kind of behooves NVIDIA a little bit to do this for CoreWeave because they need to get paid by CoreWeave. They anchor the share sale with an order of about 250 million. That is insane. And then CoreWeave's CEO came out and said this probably wouldn't have worked out had it not been for NVIDIA. And so this is where the whole suppression in data centers is coming from. I think it's still not clear fully, was it necessary to spend this much? But again, the way that I look at it is really let's think about it, right? With Meta, Amazon, Microsoft, they spent so much money on, there's tons of CapEx on data centers. And there's no way, I cannot fathom any reality where they didn't anticipate that there would be leaps in efficiencies on AI. Lower power consumption, better compute due to that, right? If not, then it's oh my gosh, we're in a situation right now. But I think a little of this might be somewhat overblown. So folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
What's going on, everybody? Jacob Shoup, you're watching the Tom O'Brien Show. Yeah, so CoreWeave basically kind of just blew up a little bit, valued a little bit under than what it should have been valued at, or excuse me, then not what it should have been, what initially it was. I think it went from like 35 billion valuation to about 20 something, which is not good. But we will talk about TSSI, which I believe is a victim of this, and maybe it shouldn't be. And we'll take a look. They had earnings, pretty strong earnings actually. So let's see, I'm gonna read through what this guy said. Okay, this is the CEO here. He had 2024 was a transformative year by all accounts. And by the way, this is an equity that I'm in, just a heads up. 2024 was a transformative year by all accounts, driven by strong operational execution and our commitment to customer services. Okay, for the full year, we delivered organic revenue growth of 172%, earnings per share of 0.24 cents compared to just over break even last year, and an adjusted EBITDA of 10.2 million, which is up 283%. From 2023, they signed a multi-year agreement with largest customer, solidifying their position, particularly AI rack integration. We exited the year with strong momentum, securing debt financing for the build out of our new state-of-the-art facility. And if I could find, it's not up on Edgar yet, at least when I looked at it. So I kind of want to look a little bit more at their balance sheet, but we will do that when it is available. We exited the year, obviously strong momentum, securing debt financing for the build out of a state-of-the-art facility. I think they're anticipating that being ready by June. And they said that's according to plan, and achieving impressive fourth quarter revenue and diluted EPS growth of 105 and 300% respectively. So this is the thing. Outlook for our industry is robust with significant capital investment flowing into AI enabling technologies. And, again, the way we're kind of talking about it is like, is it believed that Microsoft, Meta, and Amazon got it this wrong? Right? That they just spent way too much. We haven't seen, contrary to that TD Cowen, the way they were trying to paint that whole thing, we have not seen them cease the build-outs, right? Or reduce CapEx or anything like that. Probably they would say that because it would maybe save their equity price or whatever it might be. And again, keep in mind that report came out maybe 2 weeks after Microsoft earnings. And for them to change their position on that quickly, I don't, something doesn't seem exactly right to me about that. There is a chance CoreWeave was just overvalued in a major way. Their debt is very tough, right? So we'll kind of take a look at that. Again, I'm trying to find that it wasn't loading on Edgar, for me at least. So they said the outlook for our industry is robust, significant capital investment flowing into AI enabling technologies. And as far as we know, this is me talking, that will continue. Strong operational foundation established and the capacity expansion underway. We are confident in our ability to capitalize on these trends and deliver profitable growth, generate positive cash from operations, and further enhance value for our shareholders. So you had revenues of 148.1 million, up 172%. And just off the bat, what this is, so you're rising a little bit, but you're at 200 million, right, for market cap. And again, with growth companies, it's sometimes easy. Really, a lot of what you want to look at is what is their cash, what is their debt, especially, smaller cap growth companies, and then really revenue to market cap. Obviously, as that changes, you need to see more things with net income, et cetera. But, it's kind of how I look at growth companies. Systems integration revenue of $22.6 million, 157% of the upside. Facilities management revenues of $8 million, up 13%. I think that will become a little bit more important for them as we go down the line and these data centers are actually complete. There's better margins on this because I believe the systems integration, which is basically the third largest driver of revenue, procurement revenues as well of $117.5 million, up 205%. The systems integration, I think, are very tight margins for them, which would, in my opinion, be the only thing people could kind of look at and say, I don't really like it that much. But I mean, this is impressive kind of growth. And if we were to trust, what they're kind of saying going forward, and again, there's so much uncertainty right now with the data centers, okay? But this is amazing growth, and certainly not priced in if it works properly, right? So anyway, some interesting kind of stuff there. Revenues, at least in the fourth quarter, was $50 million. Oh, sorry, I want to do the full year 2024. Gross profit of $22.4 million, which is up 103%. And again, I need to see the balance sheet. I need to see the financials, actually, just not the balance sheet, but I need to see the financials so I can see if the margins have improved for them, right? And that's going to be super important as well. Or if they make any kind of commentary on that. So as it stands, I mean, that is some pretty impressive growth for TSS. I'm going to follow this. Of course, I am in it right now. And once I can get my hands on that financial report, I think it's on the 10K. Yeah, this is the 10K, right? Yep. On the 10K, we can see kind of how those margins are shaping up, right? And I'd be very interested to see what their kind of projection is on facilities management, because that, I think, can be a very stable kind of source of cash flow for them, which is beautiful. And so as they keep building it out, of course, that will get, that'll draw more cash. So kind of interesting nonetheless. If you're still interested in the data plays, keep TSS kind of on your radar, because it's interesting, and I think there's still room for growth in a major way. But unfortunate, we're just in the market. I think, if we were back in this area, I mean, you would have gotten major movement to the upside on this kind of news. I mean, seriously. But just the entire market itself, I think, is a little skittish right now with that. Let's talk a little bit about Eutelsat, okay? I wanted to take a look at it. So, give me a second. Basically, with how this ADR works, you're getting about like a quarter share, if I remember that correctly. Let me see it. It's not like that. You just got to multiply this market cap here by 4. Wow, it's off. So that is good that I wrote that down, because it's about $2,295,000,000. By writing it down, I mean in my head, but I'm pretty sure that was the exact number. It's definitely 2.2 something. But, you're already kind of looking at like nearly a $9 billion valuation on Eutelsat. Again, the ADR just being about 2.2. So that's pretty heavy already. Their earnings are, the way that they do their presentation is very aggravating, but it seems like they have about 600 million, let me see here, in revenue. See, this is so bizarre. So the first half of 2024 to 25, you had total revenues of about 606 million, right? Which is about an increase of 5.9% from what they had prior. CapEx of 175 million, which will probably continue to go on as they're just getting new systems, right, up in space. And we'll see what the, what their operational losses. You have net adjusted EBITDA. I don't like how the Europeans do these presentations. I'm sorry out there. Love you guys, of course. It's a little bit different than what I'm used to, folks. And that's a me problem. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We got a short little segment left here. Long story short, I think that Eutelsat is probably pretty well priced here. I'll do some more research, but it's just I need to. The way they do the reports is a little bit it's just different, right? So, but it seems like it's getting valued. You know, if you consider what the how much is in the ADR and what that ADR market cap is, just kind of multiply it by 4, I guess. It's like a quarter share in each ADR share. Okay, let's look here. Oh yeah, great. Here's another one. Good Lord, this is a drop for sure. Looking at Lululemon, off a clean 15%. Would assume that's just frozen a little bit. Basically said inflation, economic concerns are weighing on spending, right? And this is actually very impressive because in the past, things like Lululemon were considered to be relatively recession kind of proof in a way because of the demographics that usually buy it. So it's very interesting. They beat expectations, but they issued low forward guidance, which is kind of tough for them. Earnings per share were $6.14 versus $5.85. I mean, that's it is such a good company, and everyone wears Athletica. I mean, my apartment building, I feel like the the odd one out because I'm never wearing like what they call it, athleisure or something like that. And then revenues of 3.61 billion versus 3.57 billion. That's amazing. But you know, as I'm saying, like I'm a bit concerned that time we saw in November, December in consumers was kind of like that last big push, you know. And then Wolf, oh, poor Wolf. We're gonna take a look at this on Monday, but you're off nearly 51.58%. New CEO, uncertainty around the CHIPS Act. Okay, this is what we've been talking about. Anything that Biden did, be very careful what it was supporting because there's a chance Trump might repeal it. Folks, thank you so much for joining me. Have a fantastic weekend. We will see you Monday morning.
Building